AT Limited is considering three projects A, B and C. The cash flow associated with the projects are given below. So project A, B and C cash flows are given. C0 is time period 0, that is today. C1 is after 1 year, cash flow after 2 years, cash flow after 3 years and cash flow after 4 years. You are required to calculate the payback period of three projects. I will not be finding out a discounted payback. Sir, why rate of return is not given? It is given, but it is given only for NPV. Projects with positive NPV, if opportunity cost is 10%. So for payback, any rate is not available. I will be finding out simple payback. If the cutoff period is 2 years, this I'll explain you. This and this I'll explain you. First, let us find out payback period and NPV. So first, I'll be finding out simple payback period of project A. Project A, what are the cash flows? Today, there is a cash outflow of 10,000. Then 2,000, 2,000, 6,000, 0. 2,000, 2,000, 6,000, 0. 1, 2, 3, 4. First I am finding out payback. I want to recover how much? 10,000 rupees. I am finding out cumulative cash flows. This is 2,000. This is 4,000. 4 plus 6 is 10,000. Was not required, but still it is 3 years. I am finding out NPV also. NPV at the rate of 10%. Present value of cash inflow at the rate of 10%. I can directly find out in my M plus, right? 2000 divided by 1.1 is equal to M plus. 2000 divided by 1.1 is equal to M plus. 6000 divided by 1.1 is equal to M plus. MRC is 7978. 7978. It will be negative. This is present value of cash inflow. Present value of cash outflow is 10,000. 7978 minus 10,000. Negative 2022. This is for project A. You need to do it for B and C also. I want two answers, payback period as well as NPV. I am doing project B. Project B is negative 2000, 0, 2000, 4,000, 6,000. Third and fourth year. Payback period is not 1 year. First year you are earning 0 rupees. Second year you are earning 2,000 rupees. So payback period is 2 years. I will be finding out present value of cash inflow at the rate of 10%. It is 2000 divided by 1.1 is equal to because it is after 2 years. M plus 4,000 divided by 1.1 is equal to M plus 6,000 divided by 1.1 is equal to M plus. MRC is 8756. minus present value of cash outflow is 2000. This is 6756. This is project B. Project C, 0, 1, 2, 3, 4, 10,000, 2 to 610. 10,000, 2,000, 2,000, 6,000, 10,000. Payback period is 3 years. I need to find out present value of cash inflow at the rate of 10%. 2000 divided by 1.1 is equal to M plus. 2000 divided by 1.1 is equal to M plus. 6000 divided by 1.1, 1, 2, 3, M plus. 10,000 divided by 1.1, 1, 2, 3, 4, M plus. MRC is 14,809 minus present value of cash outflow is 10,480 will be my NPV. I am drawing a summary of project A, B and C. A, B, C, payback period, NPV. C, payback period is 3 years. NPV is 4809 positive. Project B, NPV is 6756. Payback period is 2 years. Payback period is 3 years. NPV is negative 2000. All of you have reached up till this stage. Payback period of all 3 projects are available and NPV of all 3 projects are available. Let us solve this question first. If cutoff period is 2 years, then which project should be accepted? See, what is cutoff period? Why we find out payback period? We know lesser the payback period is less risk. So the person who is investing this all money, say AT Limited, says that we do project which is having payback period of 2 years or less. So our initial investment should be recovered in 2 years. Otherwise, we don't do the project. That means this. Cutoff period is 2 years. What does it mean? The company will accept the project only if the payback period is 2 years or less than 2 years. More than 2 years, they feel it is too much risky. Then which project should be accepted? Then which project should be accepted? Only one, which is B. It is having positive NPV and it satisfies the criteria of cutoff of 2 years. Project with positive NPV we have done. B and C are with positive NPV. Alright. D is good. Please understand, this is a logical understanding of payback period. If you don't know logically, you will not be able to solve it. It was asked in 10 marks. Payback period gives too much weight to cash flows that occurs after the cutoff date. True or false? Payback period, say here it is 2 years. Payback period gives more weightage to the cash flows which are out of after cutoff date. Those cash flows are out of cutoff date. The statement is false. It does not give any importance to the figure which is out of after cutoff date. Yeah, see, instead of this 4,000, it was suppose 4 lakhs rupees. My payback period would still be 2 years. I need to recover my 2,000, which is recovered in second year. So my payback period gives zero importance to the cash flow which are after the cutoff date. Here cutoff date is 2 years, right? So the statement is false. Good question asked by institute. And now they are trying to ask one more comment. If a firm uses a single cutoff period for all projects, see what was cutoff period for the company? 2 years. They are saying if the firm uses single cutoff period for all projects, it is likely to accept too many short-lived projects. See, if the cutoff period is 2 years for the company, this type of company will always do some projects which are short term, and they will never be able to do the projects which are long term. Say long term projects, car manufacturing company, aeroplane manufacturing company, it will take 2 years to start the project. So your initial investment will never be recovered in 2 years. So long term projects always requires more cutoff period. So this is the true. If firm uses single cutoff, which is 2 years, then it will be always taking up the projects which are short-lived. This statement is true. Previous statement was false. Payback period does not give any importance to the cash flow which happens after cutoff date. That is what we have learned in D. I think it is an excellent question. Should be repeated sometimes in examination. Once it is repeated, it becomes a very easy question, right? Because we know conceptual idea of payback period. What I say is this point is good because it explains you the logical idea of payback period rather than just formula for payback period.